The measured move is a three-part formation that begins as a reversal pattern and resumes as a continuation pattern. The bullish measured move consists of a reversal advance, a correction consolidation and a continuation. Because the bullish measured move cannot be properly identified until after the correction consolidation period, it is categorized as a continuation pattern. The pattern is usually long-term and forms over several months. The three waves of the measured move pattern have specific parameters which help categorize the formation. We will spend some time in the next section to discuss each of the three waves of the pattern in more detail. Wave 1, Impulse Leg. We will begin by dissecting the bullish version of the pattern. The first wave of the measured move is an impulsive leg which begins to correct the prior trend. The occurrence of the impulse leg can often occur as part of a double bottom or inverted head and shoulders pattern. Also, the beginning of the first leg could also come after a period of consolidation. Wave 2, Corrective Leg. The second wave can either sharply retrace the first leg, or it can be a sideways movement. In either case, it plays the role of a correction or a consolidation to the first leg of the move. We use the Fibonacci retracement tool to measure the expected size of the second wave. Statistics shows that the second wave is very likely to reach the area around the 38.2% to 50% retracement if the first leg is relatively long, or 61.8% if the initial leg is of a normal size. Wave 3, Impulse Leg. The third wave within the measured move pattern is an impulse leg. This is the leg we have been preparing to trade. This second impulse leg, third wave, appears after the end of the second wave retracement is complete. As such, it is a continuation of the first leg. This is the reason we consider the measured move pattern to be a continuation figure even though it begins as a reversal formation. Some aggressive traders try to enter before the end of the second leg retracement so that they can get an early jump on the third wave, which could provide for an excellent risk to reward potential. However, keep in mind that the actual confirmation of the measured move comes only after the end of the second wave retracement and the beginning of the second impulse leg, the third wave. We typically want to channel the price action of the second wave retracement and wait for an upside breakout from the channel for confirmation to enter a long trade. A simple trend line or the linear regression channel can both be excellent tools for this application.